Well, thank you so much. Josh and Dutch Credit Union for hosting us today. As Josh mentioned, in some of the prior webinars that we've had, we've talked a bit about how where you live in retirement can have a major impact on how long your savings can last, and also kind of what the life in that place looks like. So today we're going to really dive deep on some of the factors to consider when choosing where to live in retirement. And I would say that I would just start by acknowledging that I know where you want to live is often a very personal decision. It's often about being close to family, being close to friends, being close to a specific lifestyle that you're looking to achieve during retirement. Today, we're going to talk about more of the financial and health aspects of where you live in retirement. And so I just wanted to acknowledge up front that I know it's not just about the math, that it often is quite personal, but I think sometimes when you see how the math plays out, it really helps provide some perspective on that decision making. One thing I just want to say before we get started is we're going to talk a bunch about taxes. We're not tax advisors. And so when you start thinking about the specifics of your family or your specific situation, would definitely encourage you to talk to your accountant or tax professional if you have very specific questions. So let's talk a little bit before we get started. I'm just going to kind of preview what Retirement Simplified does. And this is a partnership that we have with InTouch. At Retirement Simplified, our platform is really focused on providing you education around all the big decisions you'll make as you retire about Social Security, Medicare, spending in retirement. At the heart of what we do is we provide you a retirement score. You can think about this like a FICO for retirement. At its essence, it tells you how long your savings are going to last until in retirement. One of the things we hear from a lot of members is concern that their savings may run out. And so the goal here is by providing this education and the tools and calculators that it will give you really concrete ideas on how long your savings are going to last. In addition to the tools and calculators, we have a lot of education. And today we're going to focus in on this decision of where you want to live in retirement. But just want to let you know that all the topics that we're going to be covering today are actually embedded in Retirement Simplified, which you can find at itcu.silvur.com. In addition to topics around where you want to live, you're going to see classes on Medicare, Social Security, taxes, inflation, the list goes on. So what are we going to cover today? We're going to start by talking about how cost of living can kind of impact your retirement and your retirement spending. We're going to talk a bit about how taxes vary depending on where you live. We're going to dive into Medicare and how parts of Medicare are actually impacted by where you live. We're going to talk about housing and retirement, estate planning, and then we're also going to go through our survey. And so just a quick plug for the survey, we'll leave it up there for a couple of minutes, but we want to know where you're thinking about living in retirement. And this, again, as Josh mentioned, it's anonymous, but just always interesting for us to understand where members are thinking about retiring. So let's get started on the specifics. So the most important thing I want you to walk away with today is really understanding that where you choose to live in retirement may have a pretty significant impact on how long your savings lasts. And that's because when you look at retirement in America, a lot of the financial aspects of retirement in America are actually linked to the decision of where you choose to live. You're going to come into retirement with a set of savings and income. But as you start thinking and planning for retirement, what you're going to realize is that where you choose to live is going to impact your healthcare costs. Where you choose to live is going to impact your spending. Where you choose to live is going to actually impact your state and local taxes. And so as we go through today's conversation, we're going to be unpacking some of these topics. The good news is that after this call, I would encourage you to go on to itcu.silvur.com. You can type in your zip code and you can see, based on your personal fact pattern, how long your savings are going to last in the location that you plan to retire in. So let's just maybe put a little bit of context around it. I really believe that where you choose to live in retirement could be the biggest retirement decision you make. And I make that statement both from a financial perspective, but also from a lifestyle perspective. What we have on this image here is a map of the United States, and we've highlighted both the states that a lot of InTouch Credit Union members live in today: Michigan, Nevada, Texas, and some of the places that we know a lot of Americans are thinking about retiring, whether it's California, Florida, Tennessee, North Carolina. The numbers next to each of these states tells you how long your savings are going to last. It's based off the average member profile, but what you can see here is that for many folks living in a state like Tennessee can actually make their money last a very long period of time. States like California can end up being quite expensive. It may again be where you want to live because of family, but I think many folks who live in California also acknowledge that the state taxes and the healthcare costs there do make it a more expensive place as a retiree to retire. So we're going to dig into this a little bit more, but I just want to throw that context up here to really understand that, again, the difference between living in California and Tennessee could be your money lasting 25 years longer. So when I say it's one of the biggest decisions you could make, that 25-year difference is pretty substantial. One other thing I would just say as we get going is we're going to reserve time for Q&A. So if you don't see me responding to your Q&A while we go through, rest assured that we are going to save time at the end to answer questions. So feel free to use the Q&A button to drop those questions in. So let's talk about spending. I think many folks are pretty familiar with the fact that as you enter into retirement, your spending is likely to change. Often what we see for many folks is that spending actually goes up a little bit in the early days of retirement. That's often based on lifestyle. It might be that you're considering traveling or you're buying, a boat or an RV. There may be some lifestyle things where you're living your best retirement and you're going to see your spending go up. Often then at a certain point in time, your spending kind of baselines and it kind of goes flat. And then we typically see that spending tends to increase later on in life as healthcare costs increase. On the right-hand side of this screen, what you'll just see are some examples of how average monthly cost of living varies in retirement. And what we've used here is a baseline spending of $6,500 per month. That might not be what your spending is, but we just wanted to have a number out there to provide some context. And what you can see is states like, California have a significantly higher cost, and states like Michigan have a significantly lower monthly cost. And so what you can see there is it's this baseline of like, what are home prices or rent costs? What is food cost? What is gas cost? How that plays in to what your monthly spend is. The second thing I'd start thinking about is taxes. And what we know is that, as you enter retirement, you will be subject to federal tax rates when it comes to, for example, withdrawals from your 401ks or your 403bs. But depending on where you live, you may also be subject to income tax. And so what we have here on this page is some examples of states that don't have income tax. I know, again, we probably have some folks dialing in from Nevada and Texas, but you'll also see states like Alaska and South Dakota and Tennessee on this list, which make for them being really interesting retirement destinations when it comes to thinking about taking money out of your savings in retirement. And so again, thinking about how might I be able to achieve tax-free withdrawals from certain types of investment accounts. There's obviously no free lunch. And what I would say is that the vast majority of states that don't have state taxes, will have sales taxes. The one exception here is actually Alaska. You can see Alaska is a no sales tax, as well as a no income tax state. But as I say, no free lunch, just take into account that, if you're in a state that doesn't have a sales tax income tax, take a look to understand what the sales tax is, because it may just be that instead of paying income tax once a year, that you're really paying, a tax on just purchases on an ongoing basis. And so just factor that in, particularly in states that don't have an income tax. The other thing I would flag is that there are a few states that actually tax Social Security. And so for many of you on the call today who are still working, you may be paying into Social Security. When you start withdrawing your, or when you start electing Social Security and receiving that benefit in retirement, there will be a portion of it that is subject to federal income tax. And then in certain states, it will also be subject to state taxes. Now, the rules regarding state taxes actually vary state by state. There are certain states like Minnesota that tax all of your Social Security. There are other states that actually have an income-based threshold on whether or not you'll be taxed. So again, something to really think about, like particularly as you're considering, like, might I spend time in other states and where am I going to where am I going to have my residency in retirement, do factor in Social Security into the equation and how that might be taxed if you are thinking about retiring to a state that actually taxes Social Security. All right. So this is, I would say, like the bad news, but something that I always feel very passionate about speaking about. I think, again, for those folks that are still working, not only are you paying into Social Security, but you're paying into Medicare. And if you watch television every fall, which is Medicare enrollment season, you see a lot of advertisements for zero premium plans. And what I would just say straight up is that you really need to think about that the premium does not necessarily equal the cost. When we think about budgeting for what I would call a fully loaded plan for retirement, which includes your Medicare Parts A and D, or A and B, a Medicare drug plan, as well as a Medigap insurance plan, which would provide you additional coverage. You should really be budgeting for $500 plus per month as you think about your retirement budget. There are certainly plans, particularly under Medicare Advantage, that can optically look like they have much lower costs. But the one thing just to really think about is understanding what's actually covered. And particularly if you find yourself in a period of time during your life where you have pretty high healthcare costs, understanding how much of that is covered versus subject to co-insurance and co-pays. So within the Retirement Simplified experience, we have the ability to, for you again, to type in your zip code and for you to see what your healthcare is going to cost on a zip code basis. You can opt out of certain parts just so you understand how it works. But really important to kind of understand that there are different parts of Medicare and that those can significantly add up. If we dive in a little bit deeper, I would start by just saying that parts of Medicare actually are not influenced by where you live. So Part A and Part B, which is your basic hospital and medical insurance, are actually priced nationally. And so whether you live in Texas or Nevada or Michigan, you're going to pay the same amount. And so this year, Part A, if you have generated what are called the qualified 40 credits, which means that you basically worked for 10 years or your spouse has worked for 10 years, you don't pay, you have a zero premium Part A. Part B, you're paying about $165 per month for a Part B plan. And then there's also just an annual deductible to factor in. Again, these numbers on the right-hand side are monthly premiums, with the exception of the deductible, which is an annual deductible. Keep in mind that we're talking about premiums. We're not talking about costs. So, you're going to be subject to premiums, but also often deductibles and co-insurance as you think about your total costs. So Part D, Medicare supplicants and Medicare Advantage are the plans that are priced based on where you live. So you start by enrolling in Parts A and Part B, and then you really have a choice of, are you going to go for a Medicare Advantage plan, or are you going to buy a Medigap plan? And as part of that, are you going to get a prescription drug plan? Again, there's a lot of acronyms here, so just very high level. Part D is a prescription drug coverage. It basically helps you, access prescription drugs in retirement and make sure that there's caps on prices. A Medigap plan is often a plan that members will purchase in conjunction with Parts A and Part B to basically kind of ensure a lot of those out-of-pocket expenses. And then a Medicare Advantage plan is an all-in-one bundled alternative. Oftentimes, Medicare Advantage optically can look cheaper than a Medigap plan. The key thing to keep in mind is that the coverage is different. And so with Medigap, you'll often have a lot more choices on providers. You'll also have the ability to have coverage when you travel overseas, whereas Medicare Advantage is going to have a more narrow remit. This might be okay on the day-to-day basis, but should you at some point need additional healthcare support and you have specific doctors you want to go see, you might find that they may not be covered under Medicare Advantage. So again, as we think about kind of adding it all up, what I want everyone to really think about as you're budgeting for retirement is I want you to think about that the Medicare premiums, again, I would just baseline be average, adding in about $500 per month as you think about like the total expenses. And again, you do have these different paths. Some of the paths optically can look cheaper. Would just encourage you to keep in mind that if you're opting into a plan that is cheaper, really make sure you understand what the coverage is and that it provides the coverage you're looking for. All right, so let's talk about housing in retirement. I think for many members today, you may find that a fair amount of your retirement savings is actually tied up in your home. If you bought a house in the 80s or 90s, you've benefited generally from a housing market that point to point looks pretty attractive. There's obviously been some volatility along the way. But hopefully, if you've had the opportunity to be a homeowner, you've been able to build that equity in your home. There's obviously kind of two paths that we see for folks as they're getting ready for retirement. One is what is often called aging in place. So it's staying in your current home. And other folks start thinking about moving. As you start thinking about kind of budgeting for retirement, if you're thinking about staying in your home, just really think about the upgrades that you might need to make. I would also encourage you to check and see if you're eligible for any property tax breaks or tax breaks from a municipality. You often see that municipalities have tax breaks starting at age 60 or 65. Because there's a recognition that you may not be using some of the core services that the municipality offers, like schooling, as an example. So that's one thing to think about, particularly if you live in a high property tax district today. It may be related to education, and to really understand, like, is there any break that you can expect as you retire, and make sure you factor that into your fact pattern. If you're thinking about moving, I think many folks, it's often great to find that forever home and buy straight away, but increasingly we're seeing a number of soon-to-be retirees starting by renting, making sure they understand the market that they're in, starting to understand a little bit more. If it's a market that they're not as familiar with, they haven't spent time in, renting for a period of time to really start to understand that market and identify like what part of town you want to live in. I think many folks are also just thinking about, what type of retirement housing they're looking for. Are they looking for housing that is independent living? Are you looking for housing that has maybe a graduated housing system that will support you while you're independent, but also may have, the healthcare facilities to support you should you need those later in life? And then there's the more traditional, health-related housing that many folks will need late in life, like nursing homes. All of these things have costs associated with them, and they're oftentimes forgotten. And so just, again, really thinking about the cost of upgrades. I know myself personally, we renovated a home 8 years ago, and I was looking to replace something recently, and I was really surprised to see how much more expensive the item I was looking to replace had gotten over the last 8 years. So I would also just say, if you're thinking about making any upgrades, it's a really good opportunity to go out and just get an assessment of prices, because, with inflation the way it's been lately, a lot of prices have changed. And so really, taking the time to understand how that fits into your retirement budget is going to be important. The other thing I would just flag is that many folks will wait until they retire to move, and then they will buy a house, for example, after they retire. And the one thing I would just flag for you as you think about that is oftentimes once you retire, you don't have traditional W-2 income. Many soon-to-be retirees, when pre-retirement, go from, let's call it, being income heavy with a nice savings nest egg to being income light as they switch from W-2 income to Social Security. Mortgages are just a little bit more challenging when you don't have as strong an income cash flow associated with your earnings history. And so it's often easier to arrange financing with W-2 income than with Social Security. So I'd encourage you that if you really know that you're planning on moving somewhere, that you think about the timing of that purchase. Maybe there's a way to purchase it before you retire when you have that W-2 income, and rent the property for a period of time as a way to bridge until you move. Buying in advance also can maybe give you a little bit more flexibility on when you actually purchase, rather than feeling pressurized to buy, right at retirement when there's a lot of other decisions that are being made. But again, just really thinking about access to financing being a little bit different. Again, you may not be looking for a traditional mortgage as you're moving into retirement, but you might decide that you want kind of a HELOC, as an example, to finance a renovation, or you want to just maintain some extra liquidity and have a small mortgage where you can get a tax deduction as a way just to keep, the rest of your retirement savings a bit more liquid. The other thing I would just flag is that if you're moving, it's a really good time to review your estate plan. And I know the team at In Touch has partnered with a company called Trust and Will to help with your estate planning. A couple things I would just flag is that there are 9 states that are community property states, which means that assets purchased during marriage are split equally in the case of a divorce. The other states default to kind of naming conventions. So, who is the property actually titled under as the owner of an estate in an estate situation. If you have a power of attorney in place, just remember that if you move states, you might need a new power of attorney. I would just flag that because I know we have folks from Nevada and Texas on the line today, that Nevada and Texas are part of group of states that actually has a uniform power of attorney act that allows you to port your power of attorney when you move. But again, really important to make sure that any of the estate planning, healthcare coverage, documentation that you've put in place in the place that you live today actually works in the state that you're thinking about moving to. And then again, as you're thinking about just over, additional taxes, while there's obviously the federal estate tax, which right now has a pretty high threshold, there are 13 states that levy state estate taxes and 6 states that levy inheritance taxes. And so as you kind of think about this fact pattern of where you're leaving from and when you're going, really making sure you've taken that into account. One other thing I would just flag as you think about this, where I want to live in retirement, we are increasingly seeing that members are not going from working full-time to retiring 100% all in one go. Folks are often moving from working full-time to working part-time, and then from part-time to retirement. One of the things just to really factor in is that if you're thinking about moving, does the retirement destination actually offer part-time work opportunities? That would be interesting. What we've seen as we look at kind of retirement scores and financial plans of a lot of members is that increasingly folks are planning to work part-time in retirement. And it can be a really nice way to give you a little bit of extra cushion in your early years of retirement. There's also fun ways to think about working part-time. I have met a number of folks who are passionate, for example, about baseball, and they go work at spring baseball training as a way to see baseball, but also be able to make a little bit of extra cash. I know here where I live in New York, I met a credit union member recently who works as a docent for one of the local theaters. She's really passionate about theater. She gets to see a lot of theater as part of being a docent, but doesn't actually have to pay for the tickets. And so I think there also are like creative ways to pursue your passion and either get paid for it or be able to participate in cultural activities that you really love without actually having to pay for kind of a lot of the ticket prices that naturally come associated with them. Right, I'm going to just pause for a second and just flag that we're going to be getting towards the end of the webinar shortly. And so I'm going to cover a couple of just specific topics around each state that I know we have members dialed in from. But I wanted just to remind everyone that we are saving time for Q&A. And so I just want to give you an opportunity that if you have questions to consider putting questions into the Q&A channel. You can do that anonymously or with your name. If we're not able to answer it today, we do need your name to be able to follow up with you, but we can ask you for that as we go through the Q&A process. All right, so let's talk. We're going to go through each state. I'm going to go through Texas, Nevada, and Michigan, and we're just going to go through a couple factoids that may be helpful as you think about where you live today. Obviously, you may be thinking about staying where you live, but you also may be thinking about moving. If we think about just a couple of the financial considerations, in Texas, relative to other states that retirees are thinking about living, there is a lower cost of living. So again, if we think about this baseline of $6,500 spend per month, the equivalent spend in the state of Texas would be $6,221, so about 5% lower. I think many Texans are probably aware that Texas is one of 8 states that has no state taxes. And in the context of kind of homes in America today, kind of affordable housing options, and we just have some examples of housing options in Dallas and Houston. Obviously, the specifics of where specifically, which neighborhood you're going to live in, and what type of home will lead to a lot of variation in the home prices. But again, a really nice starting point. As we think about that retirement score and that kind of initial example, what we talked about is like an average member coming in and having a retirement score of 95 based on this profile of coming in from Texas. Just to dive in a little bit more details around healthcare considerations, because I think this is one of the places where, it's kind of new numbers to a lot of people. The first thing I would just flag is that kind of the annual Medicare costs for an individual are slightly higher than average, but not materially. So the national average is about $6,411. That's a little bit over that $500 a month number that I was talking about earlier. And again, that assumes a fully, I call it like a fully loaded plan, meaning you've got Parts A and Part B, you've bought a prescription drug plan, you've bought a Medicare supplement plan, and you've factored in, some baseline out-of-pocket expenses. One of the things just to keep in mind when you think about Medicare is that Medicare generally does not cover long-term care. It does cover care right when you leave the hospital if you've had a medical situation that's kind of short-term. But when you start really thinking about long-term care later in life, where you really need kind of ongoing support for months and maybe even years, really important to be thinking about like how might you be covering those costs in retirement. And what I've just listed here are just some examples of, there's different types of healthcare in retirement. And so whether it's someone who's coming into your home and supporting you, or whether you're in an assisted living facility or in a nursing home, these numbers are pretty startling, I think, for many folks, and is something that we really encourage people to be thinking about and having a plan around. What I've just shown you here for the state of Texas is those numbers, and then also the national averages. So again, I think the baseline numbers probably are, for many folks, can be very surprising unless you're helping your own parent right now with long-term care. But in the state of Texas, what you are seeing is those numbers, are lower than the national averages, even if the absolute numbers are still quite high. In Nevada, again, what we see is a lower cost of living, allowing you to extend the life of your savings in retirement. So again, off of a baseline assumption of $6,500 per month, what we see as a lower average spend in the state of Nevada, $6,322. Again, Nevada is one of 8 states that has no state taxes. And then for those members that are living, in the Las Vegas area, the average home value today in Las Vegas is about a little bit over $480,000. Again, the specifics of the home will obviously be based on where in Las Vegas you're planning on living and the size of the house. So all of that, needs to be kind of factored in. When it comes to healthcare costs, so the cost of Medicare is a bit lower than average in the state of Nevada. So if the average annual cost for Medicare is about $6,411 in the state of Nevada, you'll see that number being a little bit over $6,000. So about $40–50 worth of savings per month. But what you do see, which is interesting, is that the cost of long-term care is pretty expensive in the state of Nevada. You also see that home health aides kind of running about average. Assisted living facilities have a lower cost, but the nursing home costs are actually on the higher side of what we see from a national cost level. Some of this is there, it's hard for me to explain why. I would just say that there's often like supply demand dynamics around how many nursing homes there are, as an example. It often is related to like, well, what percentage of the population is in need. And so states where perhaps you see more retirees coming to, there may not have been as much building, and so there's more demand for space. And it's also about, access to staff and employees. And in certain states, it may be more expensive to attract, the talent that's needed to staff these healthcare facilities. So let's move on to the state of Michigan. Again, we're going to talk about the financial consideration. So here again, off an average spend of $6,500 per month, what we see is the average monthly spend being just under $6,000 a month. And so kind of a lower cost of living versus the average cost of living in retirement. in the state of Michigan. State tax rate of 4.25%, obviously not as low as the 0 that comes with Nevada and Texas, but lower than neighboring states. And for those of you that are living within the Detroit metropolis area, I think, obviously there's been a history of kind of lower home prices in the area, although, again, the specifics of which neighborhood you're living in and the size of the house, obviously going to impact what those home costs look like. On the healthcare side, so interestingly, Michigan has higher than average Medicare costs. So if the average, again, is $6,400 per month, we see the average plan price coming in at $7,040. We also see some of the long-term care costs being quite high in the state of Michigan. So whether it's the home health aides, whether it's assisted living or nursing homes, both home health aides and nursing homes both being above the average cost. Now, I've gone through a lot of the finances, and as I said in the very beginning, there's a lot more that goes into play in thinking about where you want to live. And so, for many of you that live in Michigan, I'm sure you appreciate the lake culture, you appreciate the national parks, you appreciate the 4 seasons. For those of you that live in Nevada, you may be sun seekers, you may enjoy the national parks, you may enjoy the entertainment that's easily accessible. And for those of you that live in Texas, you enjoy the wide open spaces, the seasons, the ability to have beaches, great sports teams. And so there are so many other aspects of thinking about like where you want to live in retirement. But I want to just give you some of these numbers because I think we all oftentimes are much more familiar with the lifestyle aspects of choosing where we want to live and maybe are less familiar with the numerical consequences of those decisions. All right, so I am going to stop sharing my screen for a second. We're going to refresh the deck and we're going to play back for you just really quickly a summary of where members want to live in retirement. And it looks like my team is ready to go. So we are, I'm going to bring back up my screen so that we can share it. Oops. Okay, so let's look at the results. So half of the folks on the call today want to retire in the state of Texas. 33% want to retire in another place. And I don't know, Josh, can you tell me, did we include a list of other states that they could write in, or we don't know then the answer of where they want to retire?
It didn't allow us to do a write-in option with polls, okay. So we did an other option, but these 4 on your screen were in that
okay.
poll. Mm-hmm.
Okay, and then so what I would just say is if you're in that other category and you want to drop into the Q&A where you're thinking about retiring just so other folks can see, I'd be really interested. We have, it looks like a smaller contingent, and it may just be based on who's dialed in today, planning to retire in Nevada, a small contingent looking at retiring in Michigan, and another small contingent looking at retiring in North Carolina. I think one thing I would just flag is that, the North Carolina option is one that I'd say North Carolina and Tennessee, we're seeing more folks looking at retiring in those states because of both quality of life, cost of living, and healthcare costs, and then the taxes. And so I'm not surprised to see North Carolina on here, but also seeing actually anecdotally a lot of folks saying that they want to live in Tennessee. All right, so let me see if we have anyone sharing in the Q&A. Oh, got Ohio, Georgia, a couple Ohios. So interesting. Okay, great. All right, so let me, I'm going to go more towards wrapping up, but then I'm going to, again, I just want to let everyone know that we have time for questions. And so I've been purposely making sure that I saved a good amount of time for questions. If there was one really big takeaway that I want you to walk away today with is an understanding that like where you choose to live in retirement is going to impact the math of how long your savings are going to last. What I would encourage everyone to do after this call is if you haven't created a retirement simplified account is go in, create your profile. You can type in your zip code. In the healthcare calculator, you can change your zip code. So if you want to like think about, oh, I might want to live somewhere else, go into the Medicare calculator. You can type in your new zip code and it will recalculate both Medicare and your full code. your full retirement score. As we think about building that retirement score for you, we're taking into effect things like spending. So what does spending look like in the location you're thinking about living in? We look at federal, state taxes, Social Security, and then again, as you think about for the future, you're thinking about property taxes, sales taxes. And again, in the calculator, what you'll be able to see is how the choice of where you live in retirement impacts your healthcare costs. And so you can run multiple zip codes in that calculator to really understand, what is the cost of the different parts of Medicare in, the different places you're looking at living. I'm specifically saying zip code because it's actually more than state. So certain places like, certain things like taxes are really impacted just based on where you choose to live in retirement. So what state? But things like Medicare actually are priced, the plans are priced at the zip code level. So which specific zip code you choose to live in really matters. We also know for spending, that's the same. Like I live in New York, and the difference between living in New York City versus living upstate, for example, in Syracuse, New York would end up with very different retirement scores because we know that those are, places that have different housing costs, spending costs, and that is all factored into the experience. Before I go to Q&A, I just want to flag that, if this has piqued your interest and you create your profile at itcu.silvur.com, we have a lot more education in the platform that you can dive into. So these classes on retiring in Michigan, Texas, and Nevada. We have classes on cost of living, understanding the cost of Medicare, estate planning. So there's a lot more there to really help you as you kind of think through these big decisions that you're going to make. All right, so I'm going to go to the Q&A. And I would just encourage everyone to drop in questions that you have. So just give me a second just to get myself organized, and we will start with the Q&A. And then Josh, do you want to moderate the Q&A with me?
Absolutely. It's one of my favorite parts of our webinar. I want to add on there that I myself have created a profile with Silvur, and I'm in the it doesn't matter how old I am on the webinar. I am not anywhere near retirement age yet, but it is a great resource. I went through this with one of my parents recently, and another one's coming up. So it's not just for those getting ready to retire, it's for anybody. And I would encourage any of you who have younger children who are working, to take a look at it, because it is very awesome information on there. Anyway, that's my spiel. All right, so our first question is, will there be a replay of the session, and also will there be a presentation available? Yes, we are recording this session, and we will make it available on our YouTube channel, ITCU Inspire. That information will also come to you in an email the day after the webinar happens. All right, and then this is for Rian. Are the Medicare estimate premiums for one person or a couple?
So that's a really good question, Kathy. Unfortunately, the answer is those estimates are for one person. And so if we go back just for a second to the numbers that we had here. Hold on, we're almost. So the numbers that we show on this chart over on the right-hand side is just an average that we see across all states. And what you see is Part A and Part B. So Part A has a zero premium associated with it. Part B is about $165 a month. And then Part D is $31.50 a month. So if you're just doing Part A, Part B, and Part D, you're already at $200 per month per person. Then the question is, like, how are you managing all the costs outside of like what those plans cover? And that's where you can take a path, for example, of like almost pre-insuring yourself with a Medigap plan, where you're saying, look, I want to make sure I've got more coverage, and so I'm just going to pay for it monthly to know that I have peace of mind that I have it. There also are kind of expected out-of-pocket costs. And so when we think about helping members plan for retirement, we have an estimate that we're going to include for out-of-pocket. Now, obviously, everyone's fact pattern is going to be a little bit different. And so you may come into this saying, look, I'm super healthy. I don't expect to be paying this. And so you can make some edits to the assumptions here to like help you personalize the plan for yourself. But those numbers that I was quoting, back to the question that came from Kathy, are per person.
Right. And then this could be a question and or comment. This person is, I'm in Ohio and I would expect Ohio to be more expensive than Tennessee, but similar to Michigan.
Yeah, you know what, Laura, I don't off the top of my head have those numbers, but I can certainly take a look as a follow-up for you and just send you like average Medicare costs in the state of Ohio, as well as kind of like what we're seeing as like the average retirement score. You can also go in yourself and create a profile and type in your zip code and you'll get the answer, not only generic answer, but an answer that's actually specific to your fact pattern of what you've saved and how you've saved for retirement.
So I'm gonna get some answers from the retirement before, and then this one is it advisable to include the current home value when considering all assets for calculating how long retirement funds last?
Yeah, so it's a really good question. And so the first thing is that when we think about how we currently calculate the retirement score, we right now default to an assumption that you're going to be living in your house. And so while your home is part of your retirement savings, we are not assuming that you are drawing down against that home during retirement. Obviously, there are fact patterns where folks are thinking about downsizing in retirement and they're thinking about selling a home and maybe buying a smaller home. In that case, one of the things that you can do just to help you scenario plan is you can actually just reduce the size of the home in the experience and maybe increase the size of your savings to help you understand, well, how would that downsizing actually kind of impact how long your savings are going to last. But again, the baseline assumption is that you need a place to live. And so we are not assuming that you're actually paying, that you're kind of drawing down your housing as part of the calculation. The other thing to think about is your retirement score tells you how long your savings are going to last. It could be that you have a pension and Social Security or an annuity, and maybe that income actually covers all of your spending needs. In which case, like the fact that your savings lasts until you're 80 may not be relevant to you because you're saying, well, look, I actually don't spend more than my income. And so I'm actually okay. And so I think that's the other thing to think about is that really trying to understand, how dependent are you on your savings and retirement versus how much do you plan to be, kind of drawing down on that home equity and kind of doing a scenario where you're actually reducing the size of your home and investing. But again, I think what we see is a lot of folks are saying, they look at property taxes, they look at larger houses maybe they were living in if they had a family, and they're really saying, well, look, if I could, and I know my own dad did this, is he basically extracted half of his home equity by downsizing. Like that gave him a really nice cushion for retirement.
Thank you. All right, next question, which is, I think it's a good one too, is if I plan to work past 65 and have employer insurance, do I need to enroll and pay for Medicare?
Yep. So really good question. So Allison, I'm going to say here, and we can kind of chat offline to get the specific, is it depends, because without knowing the specifics of what your healthcare plan is, it's hard for me to know the exact answer. But what I would say is that generally, you do need to still enroll in at least Part A and Part B. And that there are actually pretty significant penalties if you don't enroll in Part A and Part B. And so that's where I would just start. But the two things I would suggest is, one is I'm happy to have a quick offline conversation and just see if I know the quick answer. The other thing is that your employer should know the answer, because there's often like a priority of whether the employer pays or whether Medicare pays. And so your employer, like your HR team, should be prepared to help guide you through that decision.
All righty. This next one, let's see. Hello, would you please further define the average monthly cost of living? Example, what contributes to that, etc. By the way, is this based on a two-person couple member? And then do you have information for a single person monthly average, as this person lives and will retire in Texas?
So that's a really good question. So the experience of Retirement Simplified is based on your personal fact pattern. So your whether you're married, you're divorced, you're single, like all of that is factored in. And so what we just did with the average spending is that we just took like an average spend that we're seeing across the platform. If you came in and said, well, look, actually my spending is $3,000 a month. I want to understand how moving from Texas to Nevada might change things. The experience will update based on what your spending is. So we ask you what your current spending is, and then we use that as the baseline. The average numbers I was throwing out for spending were really just a kind of average member profile that we use to help us really understand some of the dynamics of, is spending going to be higher or lower in different states? But again, it's all personalized to you. So you put in your spending, and then we will use that number to help us help you navigate through these decisions. Same thing also, I would just flag for Social Security. If you're married versus divorced versus single, all of that will be taken into account in the experience to really make sure that you're getting the Social Security numbers that are relevant to your specific fact pattern.
And then, Rhiannon, and maybe you've covered this before, but besides, Social Security and, retirement income from maybe an employer, what about this in as far as choosing where to live? Should they be aware of if they have continued investments that are paying out? So maybe they've kept a 401k, or they had an annuity or anything like that. Would that be treated the same in these states that we talked before?
Really good question. I mean, and I think what I would just say is like where you just think about how you're taxed as based on where you're living when you receive the income. So for example, if you have a pension that you're going to be receiving, even if the pension was earned in the state of Michigan, it will be taxed by the state of Florida if you're living in Florida during retirement. So, I think while you've been working, you're probably very familiar with how things are taxed in the state that you're living in. You have to spend a little bit of time to understand how things are taxed in the state that you're moving to, because any distributions from retirement accounts, 401ks, pensions, annuities, the taxation will really be driven not by where you earned the money, but where you're living and where you're tax resident in retirement. The other thing to keep in mind is that where you are tax resident also is where you apply for Medicare. And so if you are thinking about, being a snowbird, for example, spending half the year, for example, in Michigan and half the year in Arizona, you really have to work through with your accountant where you're going to be resident. And that factors into like the choice of plans, the coverage for the plans, but it also impacts, again, like where are you being domiciled from a tax perspective when you think about the taxation of retirement income. Again, and that's where like I would definitely encourage you to have an conversation with an accountant to make sure that your specific fact pattern is taken into account.
The hours of operations are going to be on that manager's.
Thank you. That was just a personal question from me. I'm glad you covered snowbird, because that was going to be a follow-up question. Like half of my family does that. So should I?
No, and that's where it's complicated, and particularly for Medicare, folks have to really think about, if they're going out of state, crossing state lines, does the Medicare Advantage plan, as an example, cover you in multiple states or not? I would say that Medicare Advantage is becoming more flexible over time, but for a long time, we really needed a Medigap plan if you were going to be moving through multiple states to be able to get coverage in both states. So those are the types of things you really have to dig into as you think about some of these choices about where you're living in retirement.
Okay.
And then another question from me, just because I've been reading a lot of these in articles, is a lot of people, work and contribute to retirement here in the U.S., but then they decide, I'm going to retire abroad. So is there anything that you can comment at this time, because I know I'm springing this, but is there anything that maybe you want to give to people? Because I know we touched on this in one of our other webinars too, a little bit, but in case people are thinking of retiring to, Mexico or Belize or Portugal, have been some popular ones.
Yeah. So look, what I would just say here is that I'm not like a deep expert here, but the couple things I would just say there is that there's a growing trend for Americans to think about retiring abroad. Part of that is lifestyle. A lot of that is cost of living. My understanding is that you have to really spend time to understand how you're going to have healthcare coverage, because I don't believe that like basic Medicare you have that accessibility when you're abroad. And so you have to really just, it's one thing to be vacationing. It's a fully different thing to be full-time abroad. And so just really spending the time to understand like, well, what is your healthcare coverage going to be? Are you moving to a place that has there's a lot of countries that have state healthcare, but what do you need to do to qualify for state healthcare as an example? And so I think that's one fact pattern that you would need to go down. If you've paid into Social Security, whether you're living in London or you're living in France or you're living in Mexico, you can still draw your Social Security. And so just know that like just the fact that you've left the country doesn't mean that you're not eligible for Social Security. This is a retirement benefit that you've paid into. There may be some complications around like direct deposit. I haven't looked at this lately, but my hunch is that the US government probably isn't set up to do direct deposit into a bank account overseas. And so you probably need, you would keep your bank account with In Touch, right? And then you would, you probably move some of that money on a monthly basis to your bank account in Mexico, if that's where you choose to live in retirement to cover your expenses. But I think again, like that's where, I think is just, that's where you really want to spend a bit more time really understanding the specifics and understanding in particular, like, again, there are also multiple phases of cost of living and lifestyle in retirement. So thinking about like, is this a forever move or is this a for the next 10 years move? Because it may be perfect for you for the next 10 years, but it's not where you want to live when you're 80. So maybe it's where you want to live between 60 and 80, but at 80, you plan to return to your home state.
And if you do plan on retiring abroad, just keep in mind, just like traveling, there's going to be currency conversions, and there could be fees to access your U.S. money to convert, especially if you're using a U.S.-based institution cards. There could be foreign transaction fees, conversion fees. So you will want to take those into account as well, unless you're planning to convert everything over locally, which could be an adventure, more of an adventure than moving overseas itself. All right. Well, unless we have any more questions, if that's triggering anything for anybody, this was great, Rian. Thank you for answering my impromptu questions, because these triggered things. I'm like, oh wait, I need to think about that.
Yeah, and I just say for like all the members on the line, again, this is a tremendous resource for you. We're thrilled to partner with In Touch to deliver all this ongoing education for you. And the last thing I would just say is that we make a huge effort to keep us up to date. For example, there was obviously big budget bill signed this weekend by President Biden for members that have created profiles with Retirement Simplified. They received updates yesterday on what that meant for retirement. And so if you're looking for a way to stay up to date and really do your research, but stay up to date with how things are changing, our goal with this partnership with In Touch is to get you the information you need so you can live your best retirement.
And by the way, for everybody on the line, there is no cost to enroll.
Great member benefit. Yeah. Yes, great member benefit.
Yes. And please do. Again, I'm a nerd about this stuff, but I find it so fun, and it's almost, Miranda, you can correct me, it's not gamified, but that's how I look at it. It's the way it's designed just keeps me engaged. And they're not.
It's personalized, right? It's personalized for you. You put your information in, and we're going to get you the information that you need. That's exactly. I think so. Rather than being this generic, like we all know that everyone's retirement's a little bit different. So this is about how do we support you on your retirement journey.
And plus, I like seeing my score go up. So yay! But thank you, everyone. Thank you, Rian and David, behind the scenes there, for joining us. Again, this is recording, will be available later. Please stay tuned for future webinars. We for sure would love to have Rian and Silvur back again, and we hope to do so. Keep on the lookout, and everybody have a great day.
Okay, thank you.